Welcome and thank you for joining iShade today for our webinar and Ask the Expert session, It All Starts with Reporting, presented by Peter M. Vesness. With over 30 years experience in the financial industry, Peter is the CEO and founder of Prophecy Incorporated, a financial software service for financial professionals, CPAs, and pro advisors. Prophecy is an all-in-one financial analysis and budgeting software from seasoned financial experts. Prophecy helps business owners and financial advisors alike gain powerful insights to manage cash flow, grow profitability, and increase valuation. Immediately following today's webinar, please join us for our live Ask the Expert Q&A session where you can ask all your reporting questions from 3 o'clock to 3:30 p.m. Eastern. Without further ado, let's go ahead and get started. Peter, I'll turn it over to you now.
Thanks so much. First of all, my thank yous to everybody who has taken the time out of the craziness of the last few days of tax season here to come on to this report, to this presentation today. And I myself just got back from being in the United Kingdom for 2 weeks. So there are so many things that are changing in accountancy right now. I just wanted to spend a little time going through some elements that are going to inflict themselves on the industry here in the United States, like it or not. And believe it or not, the place where I'm seeing the trend setting is in the United Kingdom. So, what are some of these changes? Well, first of all, cloud-based accounting software is really becoming the norm. Think about Xero. Intuit is sunsetting their desktop QuickBooks for QuickBooks Online. Prophecy just released our QuickBooks Online version, which is great. Naturally, we were the ones that found where some of the flaws in the application protocol interfaces are, but it's live and active right now, just getting ready for you guys after tax season. Sage 1, second largest accounting software company in the world, is working towards releasing their cloud-based technology, where we've been asked to assist them with how their application protocol interfaces work. So certainly that's going on. For larger audiences, larger companies in the UK and in the EU, Twinfield is a growing cloud-based accounting software market. That's more for mid-size and small-large. Those things are happening, and they're becoming much more normal. So much so that you're seeing a lot of marketing specifically to the business owners, as opposed to working through accounting firms. And the reason is they're trying to say that, hey, this is simpler, you don't have to pay for blah, 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 blah. And so you see both Intuit, which has always tried to market directly to the consumers, but Xero is coming about doing it now. Sage is changing how they're trying to approach the marketplace. And, other than some of the larger organizations, whether it's Microsoft's accounting materials or people like Twinfield, which are to much larger companies, there's a big change. Tax, audit, and compliance services are getting commoditized. The accounting industry isn't able to charge as much, and there's pressure coming on it from all kinds of places. So mid-size accounting firms are starting to pursue broader services. And we're seeing this all over in the Western market, certainly in Australia, in New Zealand, in Canada, in the U.S., in the United Kingdom. The big four in the U.S. are actually pursuing clients that historically have been served by larger mid-sized firms. They recognize the shift. This is the biggest news. 2 of the big 4 in the United Kingdom have created a monthly retainer-based service model that specifically targets the small and mid-sized enterprise. Let me say this again. Pricewaterhouse and KPMG have built retainer-based services to the small and mid-sized enterprise business to go after serving them ahead of the traditional accountants that have done it. Now, how are they doing this? Well, for example, Pricewaterhouse has actually built some software applications that are very, very simple. They're nothing, quite as sophisticated as as we provide, or some of the other people like Spotlight and so on provide. But it's very, very simple type stuff. But what they do is they're charging about $200 a month, $220 a month, and from that you get a support person, you get all your taxes done in the year, you get these automated reports that come in, and you can call your accountant for any information you want. KPMG has gone a step better. They have actually done a partnership with Xero, and it's white labeled, so you don't know it's Xero accounting, but KPMG is actually providing for a similar price the ability to have the online accounting coming right from them, a 24/7 support team, an online and telephone support team, automated reporting every month, and the ability to get directly to your accountant at any time, and all your tax work done, and the ability to have more sophisticated reports in essentially in forecasting and valuation. And this is KPMG. So this is a huge change that's taking place. You know, we all know how proactive accountants can be in trying out new things. You know, you may as well try to take a cat out for a walk on a leash. You know, like it or not, pressure is growing on the industry. And just waiting around until you're forced to change is certainly going to mean the death of some firms. One of the things that we're doing over in the United Kingdom is we've become affiliated with the International Chartered Accountants of England and Wales, ICAEW. And ICAEW is a large international organization. I think there's a couple 100,000 accounting firms globally that are part of it. There's over 20,000 in the UK. But one of the reasons that we went to these chartered accountants over there is they actually will certify software as being valid. And so we took Prophecy's products over to them, and we basically, they hadn't done a forecasting tool, a reporting and forecasting tool to get certified by them in close to 15, 17 years. We're actually about to become the only accredited forecasting software tool. Well, why is this so important? I mean, for us, obviously, it's important. We believe the tool is great. But the ICAEW actually wants me to go speak to their regional places when I'm over there. I actually got tax advice from Baker Tilly, who I think we're going to work with in the UK, on how many days I can spend in the United Kingdom without having bad tax consequences. But the point of this is they know their members have to shift what they're doing. And, you know, in that I've been doing these kind of business advisory services since 1983. I think iShade's very nice. They say over 30 years. It's 33 years I've been at this. But the point is that the ICAEW is very aware that CFO-level services are needed by small businesses. And they're staring in the face that people like Price Waterhouse and KPMG are going after their members' businesses for providing these kind of services. So it's been very, very, very interesting to see that those things are necessary. Now the problem is accountants in smaller and mid-sized firms really often lack the skills. Do you really know how to do forecasting? Last year I did a broadcast on balance sheet forecasting. It's required by banking. It's called triple cash flow forecasting in the UK. But essentially, what do you have to do? I mean, you have to be able to do a multi-year projection of full budgetary needs, full growth needs, actual cash forecasting on aging receivables and aging payables, not as a sum, but in 30, 60, 90, 120, over 120 increments. You have to figure out how much of that is delinquent. You have to take the things in the balance sheet that are actually cash disbursements, not just reductions in liability. And you have to formulate a spreadsheet that does all of this before the banks will even consider talking to you about credit worthiness. How many accountants do you think know how to do that? We had over 130 some people sign up for the presentation. Now, does Prophecy software do it? Yeah. We're the only people that are able to do it at that kind of a level of detail on a 3-year forecast. So, but the point here is that most accountants in small and mid-sized firms really lack the skills. Where people like KPMG, they're used to providing these high-level advisory services, again, to larger companies. But the fact that they're about to start offering them into the SME marketplace, wow, that's a huge shift. It's a really huge shift. They have those skills. Now, trust me, if those new markets work for the large firms in one country, they will expand into all countries. How long will it take to validate, say, in the UK, what's going on? 18 months, 2 years, I think, at the most. When I was there, we're working with a lot of people that are part of David Cameron's cabinet. They have a strong focus towards economic recovery taking place in each of the territories, whether it's England or Yorkshire or Scotland or the Northeast or the West Midlands. I mean, there are all these territories. Wales, they don't have states there. They have these territories that they label as part of the United Kingdom. But they came to the conclusion that 99% of the businesses in the United Kingdom are SMEs. And they believed the real way that they were going to recover was if these SMEs could add over a couple of years, not huge amounts, but just add 1/2 of one full-time employee. If in a district like Yorkshire, which is where Leeds, that's where we're going to wind up having our national headquarters there, if Leeds could add 1/2 of one person to every SME in that region over the next 2 years, 2.5 years, there'd be full economic recovery, prosperity. Now think of that. So how are they going to do it? Are they going to provide employment incentives? No. Are they going to do it by somehow pumping artificial money into the distribution channel for roads and bridges? No. They're doing it by helping move the local leaders towards teaching the businesses how to be more effective in the fiscal management of their companies. And so the accounting industry has become a huge factor in doing it. And frankly, I do believe it's one of the reasons that KPMG and Price Waterhouse are moving into doing that. And Prophecy. They actually sought us out, which was, I'm very grateful. But, I'm sitting around in meetings there, and people are introducing themselves as part of this economic recovery team, and they all open up with saying, yeah, and my day job is, I'm an attorney, my day job is, I'm part of the city council. My day job, the one that blew me away the most, is I'm IBM's head of cloud-based technology in the EU. That's the level of person that is assisting on these local levels for economic recovery. And frankly, I'm being asked to do that, even though I don't live there. But I'm being asked to be part of it because they understand that their recovery is taking place in these small businesses. Trust me, if this works, and I believe it will, those large firms are going to do the same thing across other countries, certainly here in the United States. So, what does this mean to the average accounting firm? Really, what does it mean? I really think that one of the challenges people have in professional services is we're afraid to admit there might be something we don't really know how to do. So, I'll bring up the people at iShade asked me would I redo the presentation on balance sheet forecasting. I'd be happy to. If any of you are interested in, just send a little note, over to iShade and say, yeah, please have Peter either do it different or repeat or a new version of balance sheet forecasting. I mean, it's critical. You have to be able to know how to do it. But the point is that most people don't like diving into something they don't know how to do. And so what happens is we want to stay safe in the things we do know how to do. So what do we like? What do we do? What do we know? We know how to generate reports, right? Because we kind of know what the reports mean. We know what the KPI mean. We might have 10 KPIs that we like referring to. There might be 25 of them that we should look at, but there's 5 or 10 of them we know for our businesses, those are the right things. profit and loss statements. You know, the challenge is that the accounting industry has a unique vocabulary. And what a piece of the vocabulary means to us is not what it means to the business owners. The profit and loss statement. Does the profit and loss statement really tell you whether you're making money or losing money? No, it doesn't. Now, we know that, but your business owner doesn't know that. So if you generate a P&L statement and then you also send along the balance sheet, of course, we look at it and go, oh, okay, here are the elements we're seeing. Here's what the disbursements are. Are we sending it in accrual or are we sending it in cash? We're looking at it in terms of tax implications, capital reserve needs, and there's a lot of things we're trying to see at it, but the business owner doesn't have a clue. Cash or accrual, I mean, they know what it means, but if you're handing them something on accrual, the company might look healthy as all imagination, but in fact, the company has got big problems. It's got cash flow problems. So how do you impact business planning if you know that that's going on? Balance sheet forecasts. Again, why is a balance sheet forecast so important to a bank? Yes, it's required if they're going to give you know, a loan to the company, but it's really required because they want to know if the company has a pretty clear picture of their actual cash disbursements and capital availability throughout some period of time of getting a debt instrument in place. That's why they want to know. The fact that a business owner has no idea what a balance sheet forecast even means, that's a sad state of affairs. So the question is, what do reports really mean? You know, with so many times, the largest concern that accountants have, whether they're certified or not, is they really don't want to be creating any kind of risk or liability for themselves, and they certainly don't want to be talking about things they don't have experience in and they don't really have a lot of confidence in. So if you're hired by a Big Four firm, you know, there's a managing partner and senior teams, and you're taken along to go in and essentially look important and get paid a lot of money while you're learning how to do it. And you're supervised in a project, and you learn, literally learn on the fly what fiscal management is in a bigger company. And eventually you get promoted and you can stand on your own on a project. And so there's this very nice, gracious 3, 4, 5-year process for coming into fiscal management if you're in a Big Four. Probably is the same in some of the larger regionals, the Grant Thorntons of the world. Okay. But for the average accountant who's basically making his bread and butter on tax and audit and doing business tax and personal tax of the owners, where are they going to get that kind of background? Where do they get that kind of training? So the problem is that we have a tendency, because we might know what the reports mean, at least to some level, to hand them a report, and we maybe never even follow up talking to them about what we're seeing in the report. So it becomes a real critical issue because, you know, like it or not, you can't try to provide comprehensive CFO, financial director level services right out of the gate. You just can't. Very, very limited numbers of people have the background in doing it. The problem is, if you don't start providing some type of value-added services, whether it's next year or 2 years or 3 years from now, trust me, others are going to be migrating in. Do not think for a minute in the UK that if KPMG and Price Waterhouse are successful in going after the SME marketplace there, that shortly right behind them that you know, Baker Tilly and Grant Thornton won't be doing exactly the same thing. And if it works there, it's going to come here. This isn't a question of whether this is going to happen in the U.S. This is a question of how long it's going to take before it happens in the U.S. I've just been, you know, fascinated because those of you who have sat in on some of my presentations before, though I do full transition turnarounds, And I actually, I've been forced out of retirement by some friends to help a couple of other companies in the U.S. that need that kind of help. The whole basis of this is really the fiscal management of a company, understanding how the resources and the assets are reflected in the operational and process systems in the business. That was the whole idea behind creating Prophecy 8 years ago. So it's been very, very interesting for me to go through this process of discovery with the software company because, you know, I joke about this. Do you know how to sell your software in the U.S.? Yes, I can tell you 9 ways that don't work. But what I did find out that is the only way it's going to work is when the accounting industry gets on board with providing higher level services to the business community. That's the only way it's going to work in the U.S. In the U.K., in Australia, though with different sizes of companies and again different population bases, they figured it out. Trust me, it's happening here. It's already starting to happen here. You can't just out of the gate come in and provide comprehensive financial director level services right out of the starting blocks. Even though I knew how to do it in my 30s, it was a very nice, gracious, friendly way to help them discover things without making the CFO my enemy in multinationals. And frankly, you're going to be in the same position with the business owners, whether the company's doing $1 million a year or $100 million a year. If you're in a company that's got 20 or 25 million a year, then you've got to deal with someone who's VP of finance. Maybe they've actually hired a CFO. Does the CFO really know what's happening? Maybe they do, but my experience has found very few of them really know what's involved in that. Most of them are comptrollers and essentially cost analysts, and that's not what makes for fiscal management. So again, you're not going to be able to come in and right out of the gate do it. But what happens is it takes time to educate the clients on what these things that we throw at them are, what the words mean, what the reports actually mean. They need to talk to you. Now, many accounting firms, they will send out the reports. Very few of the accounting firms actually make a point of chatting about what's in the reports. How often should you chat with what's in the reports? Well, frankly, if they're monthly reports, you should talk to them monthly. Now, do you do it for free? I don't think so. But it's imperative that you visit with them enough to help them understand what's in the reports. One of the features that we built into the Prophecy products about 2 years ago was the ability to do valuation. Why? Because one of our accounting firms, as part of their process, quarterly would run a valuation report on the company. And why? Because they were providing value-added services, so every quarter they wanted to show how the company was actually increasing in value. It was a way for the business owner to understand, and, oh, I'm worth more because they're helping me. And obviously the valuation of the company would be growing far faster than the fees of the accounting firm. But it always started with reports. They need to talk to you. Start with the reports. So, reports open the door for more conversation. They are the beginning point for moving ahead. Your business clients have little to no idea what their reports mean. Every industry has its own vocabulary. They do. But we've got to get them out of the, well, if there's money in the checkbook, or if we do that, I'll probably have to cut back on what I take home. How many of them that understand, that by you providing a way of moving them towards tax-efficient distribution at the end of the year, that it makes their balance sheet look funny? They don't. How many of them really understand what forecasting is used for in business planning. How many of them know how to build a cash scenario that accounts for new business opportunity, changes in regulatory law, shifts in their market opportunities, a competitor who is either growing or a competitor who has gone out of business? You know, there's kind of an instinctive feel, but they're venturing into territory they don't know a lot about, and they're afraid. Business owners' businesses are their children, their babies. They want to fiercely protect them. Reports are what open the door for you for more conversation. And this is what's going to grow your practice. But more importantly than just growing your practice, it's going to be the thing that protects your practice. If the Big Four is going after the SME marketplace, you should be worried. You might say, well, it's not happening here. It will. You might say, well, that's not really appropriate for my marketplace. Trust me, word's going to get around. It's really, really important that you have a focus towards growing your practice, not just saying, things are okay, we've got, and you know, we add some new clients. When the market shifts, it's little tiny ripples to begin. But it's like ripples that are the first waves before its tsunami hits the port city. I mean, it will destroy large numbers of the practices. When I was visiting with the people at KPMG, and the person that runs the practice and the director of the whole thing nationally, I asked them, I said, why are you doing this? And they said, well, first of all, 99% of the businesses in this country are SMEs. Now keep in mind, KPMG is huge, huge in the UK, really a large practice. And I said, well, yeah, you know, I'm aware of what the government's focus is. And they said, no. What you don't understand is the level of services being provided by their accounting firms in the country is pitiful. They were disgusted with the industry, and they knew what they were doing. So you have to take an approach that says, I have to grow my practice. And the only way you're going to learn how to do the more advanced things that people are mentored or tutored in the Big Four is by starting with the basic things that you're comfortable with. You start it with the reporting. And you have to be able to do this on a retainer-based way, which is why people like KPMG, Price Waterhouse, even Baker Tilly in the UK, have their business clients on monthly retainers. It's a fixed expense for the client. The client knows what it is. They know the services they get. They feel good about the value of the services they get. And they're comfortable. And they like talking. It's really imperative that everyone here understands, without question, that changes are coming. They absolutely are coming. Business owners have new needs. You're the answer. I know that sounds strange because, you know, we tend to think of ourselves as tax and audit and compliance, right? But we're not in this happy economic time anymore where, irrespective of what we're doing, the irrational exuberance has taken over the nation. It's very hard to make money in today's marketplace. For people who are in business-to-consumer-based goods, they're fighting against cloud-based companies all the time, whether they're selling against Amazon or whether they're selling against eBay. That's driving the prices down. It's forcing higher levels of efficiency, and the small players are getting vaporized. In the skilled trades, I mean, let's face it, there isn't exactly a housing boom. So new construction, that's challenging. However, what that has meant is that remodeling has grown. How many people who have a little remodeling, you know, a basically general contractor for building decks or home improvements really have any kind of sophistication in their businesses. Many of them are seasonal. Do they even know what they should be doing from a capital formation, or how to create stability of a business and a brand that goes farther along? You know, you have to help them. You just have to help them. One of the things that we're looking at for next year is going specifically into vertical markets. In particular, we're going to be looking at agriculture. And the reason is, how does agriculture do fiscal management? I mean, they're the ultimate gamblers, right? They're looking at futures and options, and they don't even have to keep monthly books. How on earth are we going to be able to give them a real-time tracking tool for benchmarking performance? Well, we have very, very sophisticated ways of using artificial intelligence and a lot of the knowledge base that's only available through the use of the internet for building vertical market services to agricultural systems, to farms, not just small farms, not just mid-sized farms, really large farms. Why is that important? It's important because the world is shifting. The level of competition for market space is huge. You need to start off small and grow with your clients. As your clients become comfortable with a bit of gracious educational conversation, or maybe I should say, as you become comfortable with a bit of gracious educational conversation, creating advanced services gets a lot easier. You know, gradually improving performance, adding advanced forecasting tools, creating budgets that can benchmark performance, tracking the company's valuation quarterly. You know, look, as we do these things, your value is growing. And running the actual cash flow projections for the average business owner will become a natural extension of what you're doing. So don't get left behind by the big four. Don't. Because it all starts with reporting. At any rate, I'm going to continue this kind of focus over the next couple of months in working with iShade. And I realize we got done a little early, but I'm very sensitive to the fact that you guys have tax work to do. So appreciate everybody attending. I'm going to be online for any questions that you have, and I'm going to turn it back to iShade here.
Thank you, Peter. As always, it's a pleasure having you as our presenter. So now we're going to go ahead and move on to answering any questions the audience might have about Peter's presentation on our online Ask the Expert session. So I'm going to give you a quick demonstration just on how to enter the Q&A. So you're going to go ahead and log on to iShade.com, and you're going to, in the upper right-hand corner there, and then you're going to click on Ask the Expert. And then click on Peter's It All Starts with Reporting section. And if you scroll down to the bottom of the page here, you can see that you can ask any questions here. And even if you don't have any specific questions, you will be able to see what other people are asking as they're posted. So thank you all for joining iShade today. Feel free to check back on our Ask the Expert tab regularly as we announce new exciting webinars. See you all in the Q&A. Thank you.